Navigating the world of decentralized applications and multi-chain assets often brings up a major question regarding privacy, specifically whether standard tools require identity verification. Phantom functions primarily as a non-custodial Web3 wallet, which fundamentally shapes how it handles user identity data. Because it operates as a self-custodial interface for blockchains like Solana, Ethereum, and Polygon, simply downloading the application, generating a secret recovery phrase, and interacting with decentralized apps does not require any Know Your Customer procedures. Users retain total control over their private keys without needing to submit a passport, driver's license, or national ID just to create or manage the wallet. The distinction changes slightly when examining built-in features that bridge the gap between decentralized finance and traditional fiat currency. Third-party fiat on-ramps integrated directly into the interface, such as MoonPay, Meld, or Coinbase Pay, operate as regulated financial services. When choosing to purchase cryptocurrency inside the wallet application using a debit card, credit card, or bank transfer, the external provider handling the transaction will frequently mandate identity verification. These compliance requirements are enforced by the payment processors and regional regulations rather than the wallet software itself, meaning the personal details submitted go to the third-party ramp rather than the application developers. Specific advanced features introduced within the ecosystem, such as specialized cash accounts or debit card programs available in select regions like the United States, utilize progressive verification tiers managed by compliance partners. Utilizing basic features like token swaps, sending assets peer-to-peer, or interacting with decentralized exchanges remains accessible without identity checks. However, unlocking direct bank account deposits, withdrawals, and associated spending cards triggers regulatory mandates requiring formal verification through designated partners. Users aiming to bypass identity checks entirely often rely on alternative funding methods, such as transferring digital assets from an external centralized exchange or receiving tokens directly from another peer's address. Once the crypto arrives in the self-custodial address, swapping, staking, and spending within the decentralized ecosystem proceed without institutional oversight. Understanding the boundary between self-custodial software and regulated fiat gateways ensures clarity on exactly when and why personal documentation becomes mandatory in modern crypto tools.